Hi everyone, welcome to Financial Insights. I'm Linda, your accounting coach. Today I want to talk about cash versus profit. In a couple videos, a couple weeks ago, I talked about managing cash. And I love using Netflix as an example. I had discussed they made about 1.9 billion in 2019, but they were running negative in cash, about 3.3 billion, I believe. And some of you still may be asking, how is that? Well, they're betting that their content is going to produce cash flow in the future. But Netflix is a good example for us to talk about what is actual cash versus profit. And you may hear that a lot. A lot of people say, man, this company has a huge profit, increased profit, but you can still have a negative cash and not be able to pay your payroll, even though you have recorded high revenue. So in business, there are basic concepts that you have to understand. There's terms, there's processes. You don't just want to rely on your CPA or your bookkeeper or your lawyer or even your banker. Learn some basics. So in order for you not to be swindled out of money and also to make sure you're paying your taxes correctly, there's some terms that you need to understand. So today I want to discuss cash versus profit. So number one, what's cash? Cash is the actual money that's coming in. So when a customer pays you, or if you want to invest in your business, the actual money that's hitting your checking or savings account. So that's whether that's a check, a transfer from PayPal or Stripe. So that's cash. Number two, what's revenue? Revenue is the actual sale, the price that you have charged for your product or service. That's revenue. Some people also may say sales. So pretty basic, revenue or sales. Profit. Profit is an equation. So profit is revenue minus your expenses. Once again, profit is revenue minus expenses. Some people may say, well, profit is sales minus expenses. Same thing. So let me switch over to PowerPoint and I want to show you these charts will probably make more sense to you. So let me share my screen. And here we go. I'm going to go over to PowerPoint. So in business, I always tell people, think double-minded. So you have the cash basis and you have the accrual basis method of accounting. So these are the two methods in accounting. Cash basis, which a lot of small businesses and nonprofits, they follow the cash basis. Nothing wrong with that. This is where revenue and expenses are not recognized until money is exchanged. So this is where actual money, actual deposits, actual checks. Accrual basis is when revenue and expenses are recognized when an obligation is made. So you have to decide what method of accounting you want to use. And I suggest you talk to an accountant or a CPA because it can get pretty wacky. So I want to show you an example. So say, for instance, you're purchasing supplies from a vendor. If you use the accrual method, so once again, this is the accrual method. If you purchase supplies from a vendor, you're going to go into your accounting system and you're going to record an expense and you're also going to record accounts payable. And when you record this expense, it's going to increase the expense and increase your accounts payable. So accounts payable is money that you owe someone else. I'll put that there. So remember, so that's money that you owe someone else. So when you go into your accounting system, once again, you're going to create a bill. It's going to increase expense, which is going to show up on your profit and loss statement. Accounts payable, which is going to show up on your balance sheet. So you see how those transactions relate to each other on the financial statements. When you pay that vendor, you're going to go into your accounting system and say, okay, I paid it by check. You're going to record that payment. That is going to decrease accounts payable and decrease cash because that's money going out. So that's why it's so important that you review your accounts payable on a monthly, quarterly basis. Because as you can see, transaction comes in, transaction goes out. So your accounts payable should be basically an in and out, in and out. That's the accrual method. So as you can see, recording, you actually have two transactions. If you use the cash method, very simple. The vendor comes, delivers the supplies. You say, okay, here's your money, here's your check. You record the expense, it decreases cash. Simple as that. So as you can see, it's different. Accrual method versus cash. So say, for instance, you make a sale. You perform a service for a customer. You're going to go into your accounting system, create an invoice. When you create that invoice, it's going to increase sales or revenue. Accounts payable is going to be increased. So remember, accounts payable is money that is owed to you. So someone owes you that money. And let's put this here. So someone owes you that money. Once that customer pays, say you receive that check or payment by PayPal, you're going to take that deposit and offset it with your accounts receivable. So you're going to go into your accounting system, record that deposit, and you're going to record it against that accounts receivable. You're going to decrease it and increase cash because you have money coming in. So similar to accounts payable, this is why it's so important to make sure you're reviewing your accounts receivable, because you can see it's basically an in and out account. You're increasing it and then you're decreasing it when that payment comes in for you. Cash method is pretty straightforward. If you're just using the cash method and say you're not creating invoices in your accounting system, you perform the service, the client issues out a check right away, and you say, okay, you know what? I'm going to go to the bank, put it in the bank. You go back to your office, go in your accounting system. You're going to record cash as an increase and sales as an increase. Just one transaction, and that's it. So let me stop sharing my screen, and I am going to go back over here. So as you can see, accrual method, cash basis, two different methods, additional steps that you have to do. Once again, talk to a CPA or an accounting, but these are concepts you have to understand. So I challenge you to make sure you're reviewing your cash balance, what's your revenue, and profit. So remember, revenue is not cash. Cash pays the payroll, pays the bills. Revenue does not. You may say, well, I don't have time. Well, I suggest if you want to stay in business, want to keep growing, put these things in your calendar. Create a dashboard for yourself. Once again, you don't want to rely on other people to tell you what's going on in your business. When you buy a house, you have to take care of it. Similar to your business. Your business is like your child. You want to take care of it. You created it out of a passion. So if you have children or you have nieces and nephews, you have to take care of them. You have to make sure they're fed, make sure they go to the doctor, they're going to school, doing their homework. Similar to your business, there's certain things, certain responsibilities you have to do. So make sure you take care of your financial health. If you need help with your accounting, understanding cash versus accrual, or need help with understanding, okay, I need some cleanup to do, contact me at Insight Financial. Make sure you subscribe to our YouTube channel. Thanks for watching.